Hello traders, it's Thursday, September of 21, and this is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. So first of all, let's review the major market movements. And first instruments we're referring here is the dollar index in daily charts. So the US dollar index, which tracks the greenbacks against 6 major currencies, was rose broadly on Wednesday, hitting a 2-month high versus the yen and the other major currencies. As the various of signals, it may raise interest rates for a third time this year, even as inflation has remained below its 2% goals. So the US Central Bank also said after a 2-day meeting, it will begin reductions of the various of 4.5 trillion balance sheet in October by allowing small amounts of treasuries and mortgage-backed securities to run off. So some traders have thought catastrophic damage from Hurricanes Harvey and Irma in Texas and Florida might force the various to postpone the rates increase until next year. So the various of rates by a quarter point in March and June, and its current target range is now at 1 to 1.25%. According to the CME Group's various of Watch 2, show the futures market implies traders saw a 73% chance of the various of raising rates at its December 12 to 13 meeting, and was up from 52% before the various of latest policy statement and forecasts. Meanwhile, the Kiwi was gained 0.6% to traded around 0.7360 against the US dollar after reaching its highest level in 6.5 weeks, as one poll showed the country's national party pull ahead of the rival Labour Party ahead of a general election this weekend. So support for the National Party jumped 6 points to 46%, according to the One News Colmar Brunton opinion poll, while support for the opposition's Labour Party was slumped by 7 points to 37%. Having a tad in commodities markets, the gold price fell sharply on Wednesdays, and it was pressured by a stronger dollar as these various of signaled it may raise interest rates for a third time this year, even as inflation has remained below its 2% goal. So gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was settled up 2% on Wednesday, with the US West Texas Intermediate crude price gained 93 cents to traded around $50.41 a barrel. So this was despite a rise in the US crude inventories, with the market heading for its largest third quarter gain in 13 years after the Iraq oil minister said OPEC and its partner were considering extending or deepening its output cuts. So the crude prices were on course for nearly 16% rise this quarter, which would make this year's performance the strongest for third quarter since 2004. So US crude oil stockpiles jumped last week as imports and production increased. The US Energy Information Administration said as operations resumed from the impact of Hurricane Harvey, so which hit the Gulf Coast on August 25. And crude inventories rose for a third straight week, building by 4.6 million barrels, about a million more barrels than forecast. So now we're gonna review the highlighted economic data that released on yesterday, Wednesday, right, as well as the data for today. So yesterday, United Kingdom has released its retail sales for August, and it was growth unexpectedly with 1% compared to previous 0.6%. It is better than expectation as well with 0.2%. So as for United States, it has released the existing home sales data for August, and it was at 5.35 million, which is slightly lower than the expectations of economists of 5.46 million. So the crude oil inventories released by the Energy Information Administrations on yesterday, the result was at 0.703 million, which is show an increase but is lesser than the previous data. Okay, so as for today, so we can actually focus on the press conference which will be conducted by the Japanese official. Right, and during North American trading hour, United States is going to release its initial jobless claim data, the weekly labor data, and which expected to rise slightly from previous 284,000 to 300,000. So beside of the labor data, United States will going to release its Philadelphia Federal Reserve Manufacturing Index as well, okay, and which expect to drop slightly from previous 18.9 to 17.2. Okay, and the last event tonight, we can focus on the speech which will be delivered by the European Central Bank President Mario Draghi at 9:30 Malaysian hour. So now we're gonna review the technical analysis. The first instruments we're referring to the Great British Pound against the US dollar pair in 4-hourly charts. So the sterling was retreated from recent high of 1.366, okay, and it was pressured by a strong dollar as Federal Reserve signaled to raise rates for a third time this year, even as inflation has remained below its 2% goal. So the pair GBP USD currently traded a tad above the support level of 1.344, follow a closure within the both moving average lines. So with a closure below the support levels might lead for further retracement in short terms and fall further. So otherwise fail to close below this level, we're suggesting the pair to move ranging between 1.345 and 1.365 for short terms. So on the upside, only with a daily closure above the resistance level of 1.366, we open up a door for the bull, and the next resistance level we could refer to 1.377. The single currency was fell broadly as a stronger dollar as well. Currently, it is hovering above the support level of 1.187, and this level seems a strong support level as it rejected the pair to fall through twice before this. So thus, with a closure below this level indicating for shifting trend directions become downtrends and probably will fall further towards the next support level at 1.183. Otherwise, rejected to fall through again by these levels will bring a ranging trade period to the single currency, and probably it will be range bound between 1.188 and 1.2. So for the upside, we have a daily closure above 1.21 of previous high, will provide the stronger bull signal and continue its uptrends. Then we could refer the next resistance level at 1.22. The Kiwi was reaching its highest level in 6.5 weeks on Wednesday as one poll showed the country's National Party pulled ahead of the rival Labour Party ahead of a general election this weekend. But however, it's retreated soon after the various of hints for rate hikes. So looking into 4-hourly charts, the pair NZD USD was close below the support level of 0.734, which shows signals to drop further towards after another closure below 0.729 of support levels. So it was remain traded as downtrend structures, and it was adding downward momentum to the pair, and on the upsides closing above the Fibonacci retracement level of 50 or 0.735, is suggesting a shifting in trend direction become uptrend. Aussie was considered steady against the strong dollars, although it is not preventable to drop, but it remained traded above the Fibonacci retracement level of 23.6 or the price at 0.794. So it's taken as a signal to remain the uptrend structures, and closing below 0.793 is suggesting for a short retracement for the pair and fall further towards the next support level of 0.782. So on the upside, the bullish on will only can be continued by a closure above the previous high at 0.813. The safe haven Japanese yen was weaker against the dollar as well, despite the rising demand for safe haven assets. So the pair USD JPY was close above the previous high or the resistance level of 111.9, and now heading towards the next resistance level of 112.9. So the both moving average line is remain expanding upwards, indicating to remain the uptrend structures. So for the downside, the first support level will come in at 111.5, while Bank of Japan is due to having a press conference today at 2:30 afternoon, so it might publish its monetary policy and economic outlook. As for commodities, the gold price was fell sharply on Wednesdays, pressured by stronger dollars, and it was fell through the both support level of $1,321 and $1,300 respectively, so indicating for a stronger bearish ahead. Closure below the Fibonacci retracement level of 50 or the price of $1,280, we're suggesting for shifting in trend directions become downtrends. So then we could refill the next support level at $1,263 a troy ounce. But however, United States is due to release its weekly data on jobless claims and manufacturing index, which anticipated to bring further movement to gold price. And for the oil prices, with the West Texas Intermediate crude price, it was gained further despite a rise in the US crude inventories, with the market heading for its largest third quarter gain in 13 years after the Iraq oil minister said OPEC and its partner were considering extending or deepening output cuts. So the price of West Texas Intermediate crude was hovering slightly higher than $50 thresholds and remain an uptrend structure. So closing above the previous high of $51.10 a barrel, we're suggesting for another stronger bull and surge further higher towards the next resistance level of $51.50. So on the downside, falling back to the level below $50 a barrel will lead to experience a short retracement. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.